off or sell down. It's been flat and very ranged through the course of the last many hours now. Understandable given the fact that over the last 6 sessions, and today is the 6th day of the 600 plus point move that we've seen from the recent lows of close to about 10,000 or so. 10,020 I think was the precise low, and from there we've come up to 10,798. So it's been a one-way move, almost a one-way move, and it's come through in a very compressed time frame. So given that, behind us, absolutely understandable that the market doesn't do very much for a while. There is, of course, enough and more expectation in terms of what really comes out of that RBI board meeting. And it's going to be the first board meet of the RBI under the new governor. And the new governor at the helm of the RBI is what is fueling all these expectations that maybe they'd be agreeable to much easier liquidity conditions, etc. So that is, I think, an important event to watch. Maybe it underwhelms, we don't know. As of now, there is no press conference which is scheduled, but I guess there will be a release of some sort, and we'll bring you that when that actually comes through. So that's the way we're at. But globally, things are, I guess, okay. There isn't very much by way of news flow there as well, Anisha, but I think European Open, what's happening?
Oh, well, yes, globally things are a bit subdued. Asia is down about 400 points when you look at the Nikkei and the Hang Seng. European markets as well expected to open in the red, and as you can see on your screen, FTSE down about 60 points and CAC sitting with a cut of almost 1%. So quite a bit of deep cuts cutting when it comes to the European markets as well as Asia. So in that sense, our markets is outperforming a tad bit. Remember, there are some escalating concerns of a sharp slowdown in the world's second largest economy, that is China, because they have reported weaker than expected retail sales data today. Now, this has been the weakest pace of growth for them since 2003. Separately, yesterday the ECB had confirmed the end of the net asset purchases as was widely expected, but they'd also revised the GDP estimates marginally lower for 2019. So there is some niggling worry regarding the global economic slowdown, but there are a lot of data points really to track when it comes to the Indian market itself. So let's kickstart the show with the top headlines. Market trades in a narrow range with the Sensex and Nifty clocking in minor gains. HDFC and Axis Bank drag Nifty Bank lower. Mid-cap index outperforms yet again.
All eyes on the RBI board meet. As I said earlier, the board is likely to debate the prompt corrective action rules, known popularly as PCA rules. But CNBC TV 18 learns that the actual relaxation of norms will be postponed to the next board meeting.
The sale of Fortis Healthcare hits a roadblock. The Supreme Court puts the sale process on hold after Daiichi moved the apex court in contempt plea against the Singh brothers. The stock tanked over 10% intraday but has recovered a tad bit.
Yes Bank in focus yet again after sources tell CNBC TV 18 that Ram Dutt, an independent director already on the board of Yes Bank, is likely to be part-time non-executive chairman at the company.
My dream is to create second Bokaro in Jharkhand with Electro Steel. That's the word coming in from Vedanta chairman Mr. Anil Agarwal. In an exclusive interview, Agarwal says he aims to employ 30 to 40,000 people for Electro Steel.
Okay, time to get some trades on. Sandeep Wagle is with us as always on the top of the show at 1:30. Sandeep, thank you for your time. Afternoon. Is there a trade first of all? Should one do anything at this point?
Afternoon, Prashant. Ideally, one should avoid the kind of sideways move the market is stuck in a 50-60 point range. Nothing really is happening and the direction is not clear, and I still continue my bullish bias. In case one really wants to trade, I would talk of two stocks, one strong, one weak. I would go with a buy in a Canfin Homes, stop loss of 274, target of 288, and a sell in a Arvind, stop loss of 102, target of 93.
Okay, just a quick thought on Yes Bank. News flow has been coming in thick and fast there. It sold off. It climbed down 20 rupees yesterday. It's come up a little bit today. Your thoughts?
Well, it is stuck in the 150-200 range. Any move towards 190-200, I think one should sell out. On the downside, I don't see it breaking 160-150, that strong support which it has held over the last couple of weeks or so. So broadly 150-200 would be the range I would be looking at.
Fortis is completely news driven, but is there a level or something which one should use as a hard stop here?
Prashant, we have been talking of selling Fortis in the 150, rather 160, 170 band in the past, and this is over the last 6 months or maybe last 6 months to 1 year before it was delisted, before it came out of FNO rather. 120 to 140, 145 is the range I am looking at. On the upside, it will be very difficult for it to cross 145, 148, and on the downside, I think 150, 120 will still hold.
Just last one, Motherson Sumi, it's a big reversal. 179 was the high, at about 166 right now.
Well, it did show a lot of strength in the morning, Prashant, but it is not holding at higher levels, specifically 179, 180. So that is the established high for the day. But having said that, if you talk of the next 2 or 3 trading sessions, I see support coming in at 160, 158, those levels. So I don't see those levels also being broken. 158, 180 will be the range over the next few days.
Okay, Sandeep, that was the trading advice on a whole host of stocks. Any disclosures you want to leave us with? Back, well, we have been toying around the flat line when it comes to the Indian markets. The Nifty, for what it's worth, has moved into the red, and a couple of stocks have seen this sharp downtick. So JSW Steel is sitting at the low point of the day. That one had seen a sharp knock, and Cipla as well is seeing quite a bit of downtick when it comes to that pharma stock. Other than that, it's the other steel name or the other metal name, which is Tata Steel, that is coming under a tad bit of pressure as well. But the mid-cap space, that continues to outperform. That one is sitting with a gain of around 0.2%. But one space that has been under quite a bit of focus of late is the NBFC space. Remember, they were battered for the last couple of months or so on account of the liquidity issues in the system. They have paid some losses, of course, in the recent times, and that is as a result of the decline in bond prices and better liquidity conditions in the market. To get a status check on whether the liquidity issues have eased and discuss the lending trends, we are now joined by R. Varadarajan, MD of Repco Home Finance, and Raman Agarwal, the Chairman of Finance Industry Development Council, on the phone line. Good afternoon, gentlemen. Thank you so much for joining us. Mr. Varadarajan, first coming to you, and the question is, of course, on liquidity. There were some concerns over the last couple of months. Have those issues ebbed out, and how does the overall outlook look for 2019 then?
One thing I want to make it very clear to you, we did not face any liquidity issue in the past also. In fact, in the last 2 months, all the existing CPs have also been repaid, and nothing is outstanding now. Even if you take the next quarter, our liquidity position is very, very comfortable, because what we have to pay only not under CP, only under NCD of around 76 crores only, which we can easily repay.
The question was more about the industry, not about the company.
Okay.
Yes. The housing finance space, you would agree, faced a fair bit of issues, and there was a bit of a scare as well. So in that sense, where are we now?
No, definitely liquidity position has improved a lot now. There is no liquidity crisis for any of the companies as far as I know. In the entire industry, it has eased now, and they are able to get funds from banks also, and the NHB also. Therefore, there is no problem of any liquidity for any housing finance company as of now.
So then, Mr. Varadarajan, this talk that maybe the RBI under the new governor should look at easier liquidity conditions, I mean, that is completely unfounded? That demand, that expectation?
No, you can't say it is unfounded. See, for the future also, see, they want to make this liquidity position easier, not only for housing finance companies, for the entire NBFC sector.
Correct.
Therefore, so in that sense, they have to ease the liquidity, and I think they are working on it. I am very hopeful that new governor also will look into it and see that the crisis what we have seen in the last 2 months will not be repeated.
Okay, we'll discuss specifics for the housing finance sector with you, Mr. Varadarajan. We have Raman Agarwal, who represents, who chairs the body of NBFCs across the country, the FIDC. Mr. Agarwal, for NBFCs, is there what really are you looking forward to? Because, if you talk to investors, analysts, etc., the general feeling is that maybe the government will be, the RBI, will be easier on liquidity from here on. What shape, form, action it will take towards the end result, we do not know at this stage. But your thoughts?
Yeah, see, when it comes to NBFC segment, there is certainly a liquidity crunch. Let me put it straight away at the outset. However, having said that, let me also say that there was never a solvency issue or any crisis to that extent, because this entire debate of asset liability mismatch was more relevant for long-term financing players like housing finance or long-term project infra finance. And IL&FS was also one of them. No asset liability mismatch issues serious with the typical NBFC model, which is a below 5 year to up to 2 to 4 year lending. So that issue was altogether different. But the aftermath of that has been more damaging. Banks have taken a very surprising stance suddenly. Whatever they may say officially, but on the ground, the situation is that banks have been even withdrawn some of the unutilized credit limits. They are apprehensive in rolling over, or bargaining on the interest rates is being done to increase the interest rates, which is not actually called for. And this disturbs the whole situation. Although things have improved, but still the situation is that while, as I said, there is no solvency crisis, but for future growth and credit delivery, that we need certainly a support is required from the ministry. And we had done an internal, internally we compiled data on the disbursements. So I can straight away tell you that on the month of October itself, there was a decline of 30% in disbursements as compared to September.
So, Mr. Agarwal, you're talking about October, that there was a 30% decline when it comes on a year-on-year basis or a month-on-month basis.
Sorry, that was a month, that's a monthly basis.
Yeah. So, any data compilations that you have done for November or December, have things improved? Because as Mr. Varatharajan is also pointing out, he's saying that liquidity issues have eased. Is that something that you are noticing as well? And also, just another question, which sectors are seeing most of this pressure? Is it the construction and realty space?
See, coming to your first question, well, as I said, I also agree that yes, situation has eased out, but certainly not eased out to the extent that, there may not be any thought of liquidity support. That is certainly required, more so from the perspective of credit going into the system. Now you're seeing the immediate aftermath of this. You see the MSME figures, you have seen the CM figures. The automobile sales have gone drastically down. The MSME's credit delivery has gone drastically down. That's because NBFCs are not dispersing. Because these NBFCs had filled in that credit gap which was created by the banking system. So there is certainly a need.
Right. You're saying that banks, whatever they say officially, have withdrawn credit limits, refusing to roll over amounts, and they're asking NBFCs for higher rates.
That may not be the case for every, but we have received a lot of complaints from our member companies.
Okay.
Right? And
no, so that may be in response to what banks see as top tier and other NBFCs, right? I mean, it's a judgment call on behalf of banks. So how do you address that? How does the regulator step in? Yes.
No, I'll tell you that the point is that in terms of the lines which were perfectly working well, the credit lines, suddenly because IL&FS defaulted, suddenly things started changing, and banks said, okay, we will roll it over, but we increase the interest rate by 100 basis points or 200 basis points. So that is a situation which was, I think, an undue panic situation crept in. So there was a need from the regulator to maybe give some kind of a comfort. And because of this now crisis which is developed, the liquidity is not there in the system. That support is definitely required. One immediate point which we seek from RBI is, which we have discussed with them also. See, they issued a circular relaxing the securitization norms. The minimum holding period was reduced for above 5-year loan maturity loans. Now, if you look at the NBFC model, it is again lending below 5 years. So what we have been requesting is that the MHB minimum holding period for 2 to 5 year loan period, which is currently at 6 months, should also be reduced to 3 months. This will have a major positive impact for NBFCs when it comes to securitization of their portfolio to banks.
Basically, further relaxing security norms, securitization norms, basically.
Actually, further is not the right word, I would say, because they did it only for above 5-year maturity loans.
Right.
We are saying to do it also for 2 to 5 years, because again, above 5-year maturity is not the business of NBFCs. Those are the business of long-term players like housing finance and long-term project financing. So typical NBFC model is below 5-year lending.
Right. No, so when you said that there is no liquidity, that is the situation right now. Are you saying that, are you referring to the situation on the ground today, or were you referring to the immediate aftermath of the IL&FS crisis? You're talking about right now, here and now.
Let's understand things in perspective. When it was October, situation was very bad, yes. But let me put a rider, as I have always said, there was never any solvency.
No, that is, you've said that, yes.
Correct? Yeah. So the situation was very bad in October. It has improved in November. But again, I say it has not improved to the extent that RBI may forego considering any specific,
So apart from the securitization thing, what else have you put forward some demands apart from this?
Let's understand whatever support, while RBI has been providing general liquidity in this system by way of open market operations, which they've been doing, right? But those are generic. We are looking for a dedicated support for NBFCs. And the precedent lies in, even what was done in 2008 crisis. There was a special window created. See, obviously it has to come through the banking channel or the financial institutions. Obviously, RBI is not a direct lender. So it has to come through the banking channels or the financial institutions.
Right. Would easing of relaxation for PCA banks and they again starting to lend help the situation, because they've been out of the system? Yes.
Would certainly, but then as I said, that mindset of the banks, where they've suddenly gone over cautious in terms of even the existing lines. I mean, their relationship with, on a one-to-one basis, there has been absolutely no change. But only because of this, the behavior has changed. So that comfort has to come by way of a clear signal from the regulator.
Okay. Fair enough. Let me just go back to Repco. Mr. Varadarajan, for housing finance specifically, I mean, you heard Mr. Agarwal, he's talking for NBFCs, but for housing finance, I mean, any thoughts in terms of specifics that the industry is looking for?
No, nothing, because as far as the housing finance companies, NHB has been very liberal in sanctioning the refinance also. So even for our company, I can tell you, they have immediately sanctioned the refinance. I think it may be the same case with other companies also. But I also agree that initially there was some knee-jerk reaction by the banks, when they lend to NBFCs as HFC, based on because of the IL&FS crisis. But that has now settled down. Now banks also have understood it is based on the one-to-one relationship and based on the past track record. And therefore, we are able to get, almost all the HFCs are able to get the funding from the banks. Initially, they were also telling some NBFC premium they have to add to the interest rate so that cost goes up.
Right.
But that is also getting settled down now. There should be no issue on that.
Got it. Mr. Varadarajan and Mr. Agarwal, appreciate both of you coming on the show and telling us what your respective industries is looking forward to. Of course, NBFC is looking for a lot more. Mr. Varadarajan saying that housing finance companies are, he feels the industry is quite okay with what they have.